Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a WXY that is finished and continuation to the upside. In this scenario, wave W is a flat, wave X is a complex structure, and wave Y is then a triangle over here where 5 waves have finished in a wave A, B, C, D, E, bullish CVD divergences building, increasing the probabilities for a move to the upside, and also now passing the resistance area that we spoke about in the live stream earlier today. In this scenario, we are then looking for an impulse to the upside where we can still expect retracements, of course, as an impulse remains a 5-wave structure. But as price is moving to the upside, we have to wait for one specific thing, and that is a range to form. As long as price is pushing to the upside and the volume might be increasing, we're going to sit patiently and wait for a range to form. And once we get a range at whatever level, that is when we can reassess the probabilities to see if we get a potential 2, potentially a 4, or a retracement to the downside in the bearish scenario. If we are looking for resistance above price, then we do have over here some resistance. You can see that over here I have a blue box at 47.2 to 47.5, then 48.8 to 49k, and then eventually 50.7 to 50.9k. However, also at 46.2k, where we are at the moment almost, we also have a yearly horizontal level, which is important resistance, so just keep that in mind. In the bearish scenario, we are looking for 5 waves to have finished and a retracement to the downside. In this scenario, we are then looking for a flat structure in a 3-wave A, looking for a 3-wave B, for then a wave C to the downside. What lowers the probabilities of this scenario at the moment is the expanding structure of this wave 5, which then has to be an expanding ending diagonal, which is very rare and therefore lowers the probabilities that this high over here is a wave 5, increasing the probabilities this high is a B or an X, and therefore it increased the probabilities of the bullish scenario, with this then being a wave Y or a wave C, which then in the previous scenario is a wave Y. That also means that this scenario over here has a bit of a lower probability where we're looking for a flat structure, a 3-3-5 wave move, where the most common target for wave B is between the 1.236 and the 1.38, taken from the high to the low, giving us a target between 47.1k and 47.9k, with the 105 and the 1.618 being less common targets. After this wave B, we then expect a wave C to the downside in an impulsive structure. If we look more locally, the probabilities to take the high increase the moment we hit the 886 over here. The 886 is a level that we talk about often in this channel, because it is such an important level from an Elliott Wave point of view. The moment the 886 is hit, any move potentially to the downside is a higher probability to be a wave C or a wave Y, which in turn increases the probabilities to come back up later or directly continue. After an 886 touch, price sometimes does like to retrace to the golden pocket, but not today, as it simply continued and moved above the target box over here. And moving above the target box was also supported by very local bullish CVD divergences. During the live stream, I mentioned it is also important to wait for a range to form, right? We're not here to YOLO, FOMO and catch knives. And when price moved to the downside, we started to develop some bullish CVD divergences locally. These played out with the wick over here, very nice indeed. But then during the next retracement, we got more bullish CVD divergences, showing there is absorption of market shorts going on with limit long orders and pushing price to the upside at least. We also have some news this week. On Thursday at 2:30 p.m. Central European Time, you can see the red flags here, so that is some high impact news, might increase the volatility, so make sure you trade safe on Thursday. And if we then look at the probabilities of the different scenarios, then on the medium time frame, the higher probability for a while already was to take this high and look for upside. Also after the 886 touch, those probabilities increased. On the low time frame, we were also here looking for upside upside with eventually the bullish CVD divergences and the 886 touch, we now took this high. And that is why I wrote this over here as well, is that if the high is taken, currently continuation would have the higher probability compared to a wave A, B, and C. The probabilities would be higher to see continuation, but keep in mind that continuation doesn't mean only price moving in straight lines, right? If we are looking for an impulse, we can also expect waves to the downside in a wave 2 and a wave 4. And keep in mind the resistance that we have over here, which is that yearly level at 46.2k, which is important resistance. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.